What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 21st of 2021. Well, folks, I hope you all are having a fantastic day wherever you are, and I want to start off by saying happy new all-time highs. We broke through the previous all-time highs at 65K just yesterday, and it smashed up towards $67,000. It's not only an exciting time and one we should definitely celebrate, but it feels good because we stood to our conviction that we weren't in a bear market and that this was just a mere mid-cycle correction, albeit a heavier one than usual. That all being said, I don't want to sit here and champion our previous predictions or talk about how the market's at all-time highs. What I want to focus on is what a lot of people aren't talking about because most get caught up in the euphoria. I want to talk about cutting the emotions out of the equation and focusing on the key things and principles that you should be following in this case in order to make sure you come out of this cycle with life-changing returns. The biggest problem that people have when it comes to crypto is they don't follow a few key simple principles, and this is also in traditional markets. The problem is that they don't follow a few key simple principles and they end up giving back everything that they earned. They don't have a game plan established. So we're going to be talking about that throughout this video and how you can best prepare yourself. And I thought, what better way to do this than to write up a Twitter thread. So if you guys haven't already, you guys can follow me on Twitter to get this stuff when it comes out at Nicholas_Merton. And I put a quick thread together. It's just a couple key points. We'll run through it here quite quickly throughout the video on how to actually prepare going into the next couple of months to the next year. So first off, we're going to talk about the first principle, having a clear exit strategy. Now, there are really two types of scenarios here that we're going to be talking about today. If you're day trading in this case, you better know what exit strategies are. We don't even talk about day trading here. It's just not something that I would recommend to you guys, and it's a generally losing game for most people. So we're going to talk about two key things here. Swing traders, and we're going to talk about the long-term investors. Now, if you're a long-term investor and you're dollar cost averaging into crypto, your take profit position is maybe for big ticket expenses like buying a home one day, retirement, something like that that's far out, and you're willing to ride this cycle, the bear market, and keep averaging in, then you're perfectly fine in this case. You can keep doing that. And I would actually say that we're building a feature within Digifox, my crypto wallet, called Get Paid in Crypto that's going to allow you to get a portion of your payroll from your job in the form of your favorite cryptos like Bitcoin, Ethereum, and Litecoin. So if you guys are interested in that, we've got a wait list that you guys can sign up for by downloading the application. There'll be a link down below if you want to download Digifox. But if you're, like myself, to be completely fair, I do a bit of dollar cost averaging from time to time. Or at least I kind of average into the market in this case. But one of the other things that I do, and I'm very much more active than most people in, is swing trading. And I generally like to ride the broader waves of the cycle and know generally when to take profits and re-enter after major discounts, right? To where it's incredibly favorable in this case if you know how to spot these signs to where you can bolster your portfolio in this case and protect your actual profits. This is the biggest problem that people don't tackle on when they're in crypto because they get emotionally invested in their crypto, and outside of that as well, there's this kind of weird aura around crypto because it's a very tribal asset class comparative to others where you have hodl mentality and you have all these people telling you just don't sell, you can't do it, it's wrong in this case. And guys, look, when you're making an investment in a digital asset like crypto, whether it be Bitcoin, Ethereum, you name it, or your favorite altcoin, or if you're investing in a stock or any other type of asset that can move up and down in price, you have every right, and I don't care what people tell you, you have every right to be able to sell your asset if you so choose. Albeit you will have to consider in this case that it might keep going up. It could go down to your benefit in this case, and maybe you can add it at a discount, and you're gonna have tax obligations most likely. Those are all realities of profit taking. So long as you understand those, there's nothing wrong with it. Just like how it was okay if you didn't buy it in the first place. So that's something that I see a lot of people fall victim to. And the sense of actually building a strategy on how to build an exit strategy in this case, you guys can check a video we put out. We got a lot of views on this one where we talked about building a crypto exit strategy. It's on the Data Dash channel. It's a nice 30-something minute video that will go through and talk about the details of how I personally think most people should generally look at it. Again, it's not direct financial advice, and you might want to customize it to your own needs. But that's one of the key things that most people don't have. Well before the euphoric period, you should have this established because in many cases, an exit strategy is going to involve taking profits ahead of time. That's what I hit on here as a pro tip. keep your price targets conservative. And I put a little mental experiment here. Basically half of what your peers on Telegram are shooting for. So if you're in those Telegram groups, you got your favorite altcoin, and they're saying it's going to $100, it's going to $50. I would rather shoot for $50 to $25 in this case. A much more conservative target, even though it's still probably great from wherever you bought it, right? So again, keep your estimations conservative more than your peers. And that's a good mental exercise to see if you're like keeping away from the euphoric segment of the crypto space. All right, so next up here, don't get caught 2 steps behind. Now, I'm not going to hit too much on this. We just did a video actually on it yesterday in reference to Bitcoin versus altcoins. And again, it wasn't an emotional argument. It wasn't about, oh, I love altcoins or I love Bitcoin or, you know, I'm personally exposed here and that's why I like this. No, it was simply about making sure that if we found ourselves, and I'll be very humble in this case, we've been in altcoins, right? Generally speaking, throughout most of the market. It's paid us major dividends in this case. It's been a huge returner compared to just being in Bitcoin. That being said, although that's the case, we've had a little bit of a pullback here in altcoins from around 60% dominance down to 53%. In the video, we talk about how we don't want to find ourselves 2 steps behind. We don't want to switch from altcoins, you know, realizing this Bitcoin loss, going to Bitcoin, and then altcoins start to kick up again. Right? That's being 2 steps behind rather than 1 step and then eventually working your way back to the right direction, getting back to where you were and possibly climbing higher. That's the objective. We want to keep progressing, right? We do not want to get our emotions in the way where we find ourselves 2 steps behind. And just since yesterday's video, altcoin dominance has bounced off the exact support range we talked about, this key support line. Again, you guys can watch the video for the kind of intimate details there. But we've seen a nice bounce here, mainly led by Ethereum. Ethereum's up 7.6% against Bitcoin. Lo and behold, it happens right after there's peak euphoria in Bitcoin with the list of BITO, which is the first Bitcoin ETF. What do you know? A little bit of buy the rumor, sell the news type of event. Reallocation to altcoins, circulation of capital into altcoins. And in this whole rally, in this case, Ethereum is pressing back to all-time highs as well. And looks like it might be charting for new highs and new price discovery, just like Bitcoin. Right? So again, I'm not playing emotional favorites here. I'm just making sure in this case that for my portfolio, I'm not going to catch myself 2 steps behind. So anyways, we talked about that there. Again, patience and conviction is really important. Third one, and you guys know if you're avid fans or viewers of the channel, leverage trading. This is the third thing, and it should almost be the number 1 lesson that you guys should take into mind and take to heart. And, you know, I'll say this, I'm not a financial advisor, but this is financial advice because I'm going to go ahead and say something very clear here. There are a lot of people who are promoting derivatives or leverage trading platforms, especially those like myself who are US citizens who should not be doing that. And outside of that as well is promoting services that are illegal in that jurisdiction. Now, we can sit here and debate overall about the regulatory environment of leverage trading or, you know, why regulators would suppress it and whether it's right or wrong and if people should be able to take the risk they want. But look, I'm going to go ahead and give you guys my take on leverage trading. Okay? Leverage trading is a losing game. Notice how in the earlier part of the video, I did not promote the idea of day trading. Right? I've tried to day trade before. There's some markets where I make money and I can generally successfully day trade, but the stress, time, and consumption of your life that goes into it, and outside of that as well, if you do happen to be that 5-10% that can make money trading, you likely will not be able to outpace just averaging into the market, especially in a hyper volatile, hyper expansive, and high growth market like crypto. I'm going to go ahead and put it out there, guys. You see all those posts on Twitter from people who are sharing their referral links, promoting the use of leverage. And for those who don't know, in this case, it's basically borrowing capital to increase your risk exposure to your underlying investments. Right? It sounds great on paper. You see all these people talking about, cool, I made $4 or $5 million today. Well, they're people with a lot of money, and you want to know how they got it? They probably got it shilling their referral links to Bybit, to FTX, to BitMEX, to all the leverage trading platforms, Phoenix, you name it. And I want to make it very clear, guys, none of them are affiliates of our channel. We don't work with them, and you're never going to see that promoted here because, to be honest, it would be like promoting a casino on my referral links, right? So again, just take it with the action here that I don't actively leverage trade, right? I would never promote that to you guys in this case, right? So again, the key thing here, taking this as a whole, it's a losing game, right? And one kind of harsh analogy I use in this case, like imagine that I told you if you walked across a tightrope in this case, and whatever amount of money you could carry in a backpack, you could multiply 20, 30, 50x in this case. But if you fall off that tightrope, you lose it all, right? Your life savings, the amount of money you put in, are you really going to do that, right? And maybe put chump change in this case, like a couple bucks here and there. But to be honest, guys, generally, I'd rather play my odds in this case on winning out long term and building up a substantial portfolio. And that's the mentality of, again, either swing trading or dollar cost averaging. And again, if you guys are interested in that, a winning strategy that beats out the market 88 to 90% of the time, dollar cost averaging is a solid bet. So you beat out 90% of the market just like that. Really incredible stuff. All right. The fourth one here is don't revenge trade. This is something I have been definitely guilty of, whether it be in equities or crypto. I'm going to be very critical of myself. I've had that happen before in this case where I get emotional. And for example, I will not have sold the top and something's going down and I buy into it. This is basically when, for example, you either don't get the return you were expecting from an investment or you take a loss. And what you then go buy on and do is one of two things. Either you try to reinvest back into the asset at another price, or maybe when the momentum comes back, and then you usually, statistically speaking, will lose again by the time you actually sell that given asset, or you go on and take greater levels of risk. You start speculating on smaller assets in this case that are more volatile, more high risk, and potentially high return. You start utilizing, as we just talked about, leverage in order to increase the chances of your returns. And the really problematic thing that I've seen, and I think a great example that I could show you guys here is total market cap, is how much this will warp your perception. And we'll go back to that first point that we talked about, or it might have been the second point, which was don't get caught 2 steps behind, right? So we'll give a great example of this, right? We're riding towards all-time highs. Long-term investors, you've been here on the journey in this case. You've been unaffected. You've been holding those positions, right? You are now, in many cases, whether Bitcoin or altcoins, either near all-time highs or at all-time highs in your portfolio value. Bravo to that, right? The problem that many people had was back here in May when the correction came through, many people panic sold their positions, predicting that it was a bear market without any serious confirmation, not waiting for a rebound, a lower high in this case, right? We had a pretty fast correction. People sold their positions, and guess what they did afterwards? They were so confident in the conviction that they sold, the emotional side in this case, that they started to short Bitcoin and other crypto assets at the bottom. Now, I'm not here to criticize you guys. If you guys were in this basket in this case of individuals, I've been there with you. I'm not here trying to bash or belittle anyone. I found myself 2 steps behind. I had to learn everything the hard way. The key point I want to mention here is that we should always generally be contrarians to the emotional sentiment of the market and not find ourselves 2 steps behind and not try to revenge on losses or paper gains that we lost, right? Because in this case, whereas people's expectations are that they're going to go with the trend in this case, the clear momentum right now, the reality tends to be very different. And we're one of the few people who were holding our convictions here at the $1.2 trillion mark and broadly speaking, the $30,000 support range for Bitcoin. One of the few people who said, guys, this is a range to watch. Do not fall 2 steps behind, right? And luckily, it's paid off very well. In fact, we added more in this case on the lows. We averaged into the market, right? So again, key point there, right? Don't revenge trade. Don't badger yourself if you make a 5x versus a 10x, because all you need after that is to take those locked in profits and go find somewhere else where you can make 100% return. And in crypto or even equities, if you play it right, that is really not that hard to do within a year, 2-year time frame. Sometimes in a matter of weeks or months if you're really good at picking the right plays. All right. Now, let's go ahead and talk about what I think is on a moral level, one of the most important things you guys can do, okay? Now, I understand at the end of the day, depending on where you live, what your financial situation is, everyone's got a different standard of living. Everyone's got different desires for where they want to be in life. And to be honest, everyone at their core has got their own problems and financial costs. But one thing that's so great about crypto compared to any other market is the kind of returns you can make in this exponential market. You're just not going to see equity markets double within a year, whereas in crypto, it can double multiple times over in a given cycle. Because of this, people have made really, you can't say it any other way, life-changing returns. I know I've done great in crypto, and many other people have done great in crypto. So one thing I really want to encourage is that you do something charitable. Now, I'm a big fan of, reinvesting and building really valuable companies or supporting certain initiatives that you really like. But one of the things that I really recommend is checking out Kiva. Now, Kiva is a nonprofit organization, and its focus is to help support microfinancing loans. This basically means that you can put in $25, $50, $100, or a much more substantial recurring amount on a monthly basis towards hundreds, if not thousands of different borrowers across the world who are in much, much less fortunate situations than I would say probably most of us are, right? Who aren't invested in crypto, who will miss this journey in a lot of ways and this investment opportunity. And outside of that, don't have the time to think about investing in crypto. They're trying to go out there and make a better life for their family and friends. And I'm not trying to stand here in a big spot and say, man, I'm absolutely philanthropic and stuff, but I think that this is something we can all do. And what I've committed to is as we go into the bear market, we start to lock in profits, I want to start making monthly contributions and this is the cool part, you can not only make monthly contributions, so you're allocating a bit of your savings or your net worth every single month into it, but here's the cool catch. It's not just a charitable donation you give to someone where the money goes away, it helps one off, and then it's done, where you have to put more money in. What's cool about this is that you can re-lend out the capital once the borrower has repaid you. And it has generally around a 98, 99% payback rate. So you're not earning any interest, right? So you're losing a little bit out to inflation, but you're going towards making leaps and bounds for people across the world in ways that are unthinkable and unimaginable. So again, I really think that, in this case, there's a lot of great innovations like equity crowdfunding, microfinancing. Microfinancing is one of my favorite in this case, to leave an impact on the world. A couple $100 in this case to some of us may not be that much by the end of the cycle, a couple $1,000, right? But that will go leaps and bounds to help people. So anyways, there's a link down below in the description. If you guys want to join our team, in this case, we've got Team Digifox, where we're all helping to pitch in and make monthly contributions. And I'm making automatic recurring loans. I've put in about like $2,000 per month, and I'm going towards doing different types of charitable loans. And I'm hoping to increase that as we go towards the end of the cycle. And I'd love if you guys want to join me in whatever level you can contribute, whether it's a couple bucks here and there or a substantial amount. We'd love to get that community building and stuff. So anyways, guys, that's it for today's video. Enough rambling. Again, if you guys like this kind of content, you should not only consider subscribing, hitting the bell icon, but you can also follow me over on Twitter at Nicholas_Merton. That's the real one. No Data Dash profiles or anything. That's my Twitter at Nicholas_Merton. And yeah, guys, that's going to be it for today's video. If you liked it, drop a like. And if you guys have a tidbit of information, like a tip that everyone should follow, you think, leave it down below in the comments. I want to get that discussion going. And yeah, guys, thank you guys so much for the continued love here on the channel. I've loved being able to do this over the past couple of years. And I can't wait to create even more content as we go into new all-time highs and new price discovery within crypto. That being said, everyone, have a great rest of your day, and I'll see you all in the next one. Take care, everyone.